Let's have a look at the bearish base. I've identified a key daily 4-hour resistance zone, as in the previous examples. I like to trade this pattern on a 1 or 5 minute chart, but it can be traded up to sort of a 60-minute chart with relatively small risk. And what we're looking for is we're looking for price to approach our key resistance area. Once it hits the level, we're looking now at a smaller time frame. We're looking for price to react off the area. We're then looking for that area to hold as resistance and a leg down. So if we have a look at our area, we have an area of resistance becoming support, and then we're looking for price to hold as resistance. So we've got minor resistance and support level, and then the major level, and it's at the major level where the institutional flows come into the market. So we're using this smaller pattern to reduce our risk and a way to get in on the higher time frame levels. So it's at this area right here, resistance, support. We're looking for resistance to hold. We're looking to enter on a retest using a limit order with a stop loss just above the highs. Price rallies up into resistance and we see a nice little reaction off the level. We then look for previously broken support to now hold. If that level holds as resistance, we can start reducing our risk on the trade. And we look for a move down. Here again, we want to target a higher time frame level. So this could be intraday low or the previous day's low or a Fibonacci number, so that we're getting a good risk reward on the trade.